Today, an Australian dollar stablecoin arrives quickly. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and property news with a distinctively Australian flavour. Last week, ANZ announced that it had successfully executed the first ever Australian bank issued Australian dollar stablecoin, the $DC payment, through a public permissionless blockchain transaction. ANZ delivered the stablecoin for Victor Smorgon Group via Zerocap, a private wealth management firm for digital assets. ANZ expects demand for its Australian dollar stablecoin, which it calls $DC, to soar as more investors look to buy digital versions of real-world assets and trade them on blockchain technology. A stablecoin is a cryptocurrency with a value linked to a commodity, currency or algorithm to manage supply. Stablecoins interacting with blockchain technology, which removes intermediaries, can settle transactions in close to real time. This reduces risks from delayed settlement for banks and their customers. ANZ minted 30 million of $DC using an ANZ-built Ethereum virtual machine, compatible smart contracts deployed through the Fireblocks platform. These coins were transferred between the parties and later redeemed back into fiat currency. ANZ Banking Services lead Nigel Dobson said, an ANZ-issued Australian dollar stablecoin is a first and important step in enabling our customers to find a safe and secure gateway to the digital economy. Stablecoins are a new way for customers to transact, and in this case was an efficient and direct way for Victor Smorgon Group to access Zerocap's digital assets exchange and move funds across a decentralized network. We're excited to continue to trial our capability and explore how this use case can be applied in other industries and customers in the future. Victor Smorgon Group CEO Peter Edwards said, through the Zerocap platform and continuing our multi-generational working relationship with the ANZ Bank, we're excited to have an Australian dollar stablecoin facilitating innovation and investment. The Victor Smorgon Group is a family business working across multiple asset classes, following a thematic-based approach to asset allocation. Last year, we took a strategic shareholding in Zerocap to make investments across the digital assets class. Zerocap is a market-leading digital asset investment and technology firm at the intersection of crypto investing and traditional finance, providing products to investors and institutions globally. Zerocap co-founder and CEO Ryan McCall said, truly understanding the needs of institutions like ANZ was critical. Zerocap playing a role in this groundbreaking initiative. This is a collaboration that we're incredibly proud to be part of. Most of the crypto industry has been focused on directly servicing the retail market, whereas we've invested from the outset in establishing the product, technology, compliance and team to properly service private and institutional clients like the Victor Smorgon Group and ANZ. Digital assets are going mainstream. We're thrilled to be at the forefront of driving adoption and bringing that vision to life. ANZ worked closely with leading providers in the digital asset domain, including Fireblocks, Chainalysis and OpenZeppelin, to create an in-house, purpose-built stablecoin smart contract. Fireblocks CEO Michael Shelov said, the financial sector is undergoing rapid transformation and we are enabling institutions with end-to-end technology for plugging into tokenisation, DeFi, staking and crypto trading. By being the first bank to mint a stablecoin, ANZ has established itself as a leader when it comes to innovation, and we look forward to welcoming other institutions who are on the same path. The smart contract and supporting infrastructure were designed to adhere to industry best practices around secure digital assets custody, smart contract auditing, transaction screening and market-leading monitoring. ANZ has a strong track record adopting blockchain solutions and is a founding partner of Ligon, which uses blockchain technology to streamline bank guarantees. Now, as the AFR commented, It is the first time an Australian bank has minted a digital asset linked to the value of the Australian dollar, and maybe the first time a bank anywhere in the world has created a stablecoin that has been used in a real transaction. It comes as the federal government considers new laws to help Australia become a leading jurisdiction for digital assets. The move will boost ANZ's credentials as major banks race to develop new forms of money and will be closely watched by rivals and regulators. The deal shows Australian banks can create alternatives to central bank digital currencies, the CBDCs. The Reserve Bank is exploring the creation of a CBDC for the wholesale and retail market, and bank offerings also present competition to private technology players using stablecoins. In the US, USDC, one of the most popular stablecoins, has been created by Circle, a non-bank. A working group established by US President Joe Biden wants stablecoins to be issued by regulated banks to protect users and financial system stability. Australia has no equivalent of USDC or Terra USD, another popular US dollar stablecoin. Private Australian dollar stablecoins include the Australian dollar token, the AUDT, True AUD, created by US company Trust Token, and XAUD, but these have not gained major traction, are not supported by mainstream crypto exchanges, and do not offer enough liquidity to be useful for most investors. While ANZ's $DC will initially be targeted at institutional clients, it expects it will ultimately be listed on an Australian licensed crypto exchange to help facilitate digital asset transactions in retail markets. ANZ is working with its regulators, including APRA and AUSTRAC, to ensure they understand the offering, ANZ said. Australian dollar cash will be held at $1 for $1 in a trust to fully back the $DC. The bank sees itself changing the form of money without creating new supply. ANZ is working with several advisors to create consumer protections. These include Zerocap, which has created custodial infrastructure and is keen to be regulated under the new Australian crypto licensing regime once it's established. Both ANZ and Zerocap use accounts at Fireblocks, a certified global digital asset custodian, to transfer the stablecoin between them. Chainalysis is providing assurance around regulatory obligations, while Open Zeppelin has audited the smart contracts. There is inherently a lot of trust that comes with ANZ, and if the $DC is traded on open market, it should hold its peg as long as the market has confidence the one-to-one backing is there, said Ryan McCall, the CEO of Zerocap. The Reserve Bank will be very interested in how this plays out, as will the other banks. Ultimately, whether it remains with ANZ or becomes a joint venture with the RBA or other banks remains to be seen. But it is great ANZ can, operating with a regulatory framework, move forward with this initiative. It's very significant for Australia and the ecosystem as a whole, and so far as I'm aware, this is a world first for a bank to issue a stablecoin. A group of US banks, including New York Community Bank, First Bank, Sterling National Bank, and Synovus, said in January they planned to create a stablecoin to be known as USDF, but transactions have not been conducted. Senior lawyers working in the digital asset space described ANZ's involvement as groundbreaking. Banks are a natural fit for an Aussie dollar stablecoin issuance, bringing decades of trust to a novel product, which will see faster mainstream adoption with the imprimatur of a major bank, said Michael Bacchia, a partner at Piper Alderman. There have been a variety of privately issued stablecoins which are in the marketplace, but uncertainties around the status of those coins have kept them from being listed on exchanges. I expect a bank issuing ERC20 stablecoin, a standard on the Ethereum blockchain, to be swiftly made available across major exchanges. The transaction for Victor Smorgon took place on the Ethereum blockchain, which Mr. Dobbins said involved a relatively high cost compared to traditional payment systems, given congestion on the Ethereum network had pushed up transaction fees known as gas fees. However, ANZ expects transaction costs to fall under a new version of Ethereum set to launch mid-year, and it's also preparing for the $DC to work on alternative blockchains, including Hedera. NZ's move shows that as crypto comes into the mainstream, banks are keen to provide on-ramp and off-ramp services to help customers access opportunities in crypto while safeguarding assets. Everyone thinks it's a banks versus crypto, but that is not the case. you absolutely will need banks. They will turn into on and off ramps to provide facilities and services to come on to the crypto and digital sphere. Igor Seledska, co-founder of Magnet Capital, told the Blockchain Australia event this week. On and off ramps for Aussie dollars will be controlled by the banks and government, but give individuals access to things like crypto, and they might not even know that they're interacting with a crypto back end. ANZ's move will increase pressure on other banks to create similar offerings. Commonwealth Bank's head of digital assets, Sophie Gilder, said this week that CBA saw the creation of programmable currency as a key priority to allow it to participate in the tokenisation of assets, creating digital versions of real-world assets that can then be traded and boosting liquidity. The Reserve Bank will also be monitoring developments as it considers creating a CBDC for the wholesale market, including to reduce the cost of sending money offshore and potentially the retail market. Reserve Bank Governor Phil Lowe told a banking industry event this month that tokenisation was a major theme in global payments. A dollar DC could be used to buy a range of cryptocurrencies and used to allow people to access the metaverse and NFTs. And said it will be programmable, allowing it to interact with smart contracts on Ethereum and ultimately help facilitate atomic settlements of mortgages, allowing payment and the exchange of title to occur simultaneously. We see our digital coin will be programmable for our customers' needs, Mr. Dobson said. Where our coin needs to speak to or understand communications from other smart contracts, we have an ability to design that code to communicate with a tokenized physical asset. And we can modify our coin for our customers' needs, whereas CBDC is likely to be more generic and focused on person-to-person payments. We have a strong thesis. This is the first digital asset we'll be dealing with, and it will enable transactions across a range of other digital assets that be tokenized securities or tokenized physical assets. So this is an important development insofar that it shows that the future of digital currencies is more than a blockchain, and it's more than a Bitcoin. This is an important step. But of course, it's also a long way down the road before we start seeing them used day in and day out. And there is still a tussle ahead between the central bank digital currencies, controlled by central banks, of course, and those in the private sector, as well as the devolved and decentralized Bitcoin type of coin that essentially is in some competition. But this is a significant move, and it further shows that digitalization is coming. I'm just not quite sure its destination or its impact. Watch this space. This is Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.